Howdy, folks, and welcome to the Daily Coin. My name is Rory, and I have on the line my good friend and fellow truth teller, Mr. Eric Dubin, who is the managing editor over at the newsdoctors.com. Eric and I are actually going to walk over and knock on the door of the U.S. Mint and see if anybody's home. How you doing today, Eric?
I'm doing great, Rory. Thanks for having me on.
What's going on?
I'm just trying to, extract myself from a cave and hiding, markets crashing, all that good stuff. At least precious metals.
Yeah, precious metals there. They've got them in a stranglehold, don't they?
Well, I don't know. I mean, at this point, it looks like they are having to let go a little bit just because of the severity of the crash, eliciting huge jump in physical demand. And that's their Achilles heel. Anytime they push the price down a lot, the Asians want more. Even Americans now want more. That's saying a lot when the Americans step up to the plate.
You got that right. I'm still kind of waylaid by the events of yesterday, and I was listening to the show that you and Doc and Turd did late yesterday. I listened to that. I've listened to it a couple times this morning. And I still go back to the question that I've been asking for, it's got to be close to a year, if not longer. Where is the metal coming from? I mean, Sunshine, if I understood correctly, I think Doc said that Sunshine Mint, who makes the blanks, is now 4 weeks delay for retail and is not.
Did he mention that in yesterday's show? I thought that was something you talked about earlier in a different show, maybe about a month ago.
No, I thought that was, I'm pretty sure.
You're probably more correct than I am just because of having listened to it more than once. And yesterday was a pretty stressful day. So
yeah, it was crazy.
Wouldn't bank on my memory.
So, I mean, and once again, I mean, it comes back to, where's the metal coming from? I mean.
The one thing you have to keep in mind is that when they do raids like yesterday's raid, it, is, for all intent and purposes, not anywhere close to the first notice day. Actually, it was pretty close to first notice. I take that back. But the delivery days on COMEX are further out into the month, so they can flip back and forth in a book position. Their average holdings over the course of what, in fact, amounts to many, many months of positioning. The ability to push paper prices down without dealing with the consequences in full immediately are what allow them to continue to do this to a much stronger effect than what you would think possible. Just because the day of reckoning for reconciling of delivery out of COMEX in their vaults is focused on a specific calendar week. So that, 3 out of the 4.5 weeks or whatever in any given month, they can play games a lot easier than during the delivery month, or delivery week, excuse me.
Since the COT is cut off, I believe, on Tuesday, and then...
Right. And I think there's just the Tuesday issue, because that's when they cut off any additional reporting for the report that is delivered on Friday.
That's it. It's delivered on Friday, but it's cut off on Tuesday. Why isn't it delivered on Wednesday when it's cut off on Tuesday, which...
Yeah, they need to, make sure that they got all their lies in sync.
Exactly.
Harder to tell lies than to tell the truth. You got to be more careful.
You have to make sure everything is in sync.
And of course, it's not. So
no,
they get the data directly from the bullion banks. The COT report is nothing more than whatever the whims are of the JP Morgans of the world, basically. So there's no real telling that the information we're getting out of there is meaningful and accurate.
I don't think that it has anything to do with reality. And,
the level of minutia and gymnastics that the analysts, people who spend a huge amount of time hyper-analyzing this.
Are you seeing, I've been out looking at, I use eBay as one of the gauges for what's going on. And I was just looking at it just before I called you, and there's this one dealer on there. I don't know if it's an individual or a dealer. I'm pretty sure it's a dealer. I wrote an article on Halloween called A Glimpse of Real Demand for Physical Silver. and that was on Halloween. It was about 12:30 in the afternoon, and I took a screenshot, and this dealer was on there, and they had sold at that up to that point about 10,000 rolls of eagles, and as of right now, they've sold almost 12,000 rolls, and just in 6 days. That is just a huge amount, and their premium just went up just a little bit, which is a $4.88 premium per coin, wow, which is huge.
Yeah. eBay is a little tricky to use as a gauge for the physical market. It's definitely good that you're looking at concluded sales. So a lot of people, when they cite eBay, they just go log in and see whatever anyone will be asking, and they'll report back really large, sometimes premiums of 100% or more for a silver eagle, or non-numismatic coins in general, like a Carson City dollar or whatever. And the other thing too is that there's a certain kind of built-in premium that is associated with the fees and the PayPal fees,
right?
And the higher levels of postage, and just the transaction costs overall on eBay are much higher than an average coin place.
Yes.
And people have just kind of become acclimated to that. And there's a certain percentage of the market, and it's small and dangerous to extrapolate based on it. But there's a certain percentage of that market that really doesn't care about a $4, $5 premium on a silver eagle because they don't know any better. So, all those caveats need to be taken into consideration when you judge eBay as a guidepost for what's going on in the physical market. It's far more telling when the mint is flat out says, "Sorry, we sold out," even though 4 hours ago we had 2 million in stock.
Yes, and I agree with that wholeheartedly. And the reason I've just recently been doing it because of the price smash, that's been going on for the past couple of weeks in particular. Where it's down what, $1.50, $2 in the last 2 weeks, silver.
Right.
That always spurs more buying. You have to look at it, even though it is a small piece of the market as far as what's going on. It's still something that everybody can look at, and as long as you know what you are looking at, then you can get a pretty good idea of what's going on. And
for example, in 2009, when silver was most extreme in availability, you'd have upwards of 6 months waiting time for any order of size, and sometimes even 3 months for just something like a single roll or whatever of silver eagles. Back in those days, eBay's premiums were 50% to 100% on average, and that people were buying it. It was astounding. So, that signal value for market intelligence is very valid and important. When it's that extreme, you can see it.
Because
I don't know.
I look at it, and the way that I see it is because that's where I was making purchases when I first got introduced to it. I didn't know what else to do, didn't know where else to get it. So,
and a lot of people are not close to coin stores. Get a lot of people in rural communities and whatnot that just find it a heck of a lot easier to buy off of eBay, and if it's $1 or $2 extra per coin, they're going to see that difference more than made up in gas differential just to get themselves down to a coin shop.
Exactly. Exactly. So
maybe they might have a mail order favorite place that they'll go to or whatever, but eBay definitely does serve a purpose.
And once again, like I said, I use it because there is a certain segment of people out there, like what you just described, and like what I'm describing, as far as people that are new that don't know to go to SD Bullion or go to AppMax or wherever, Provident or Gainesville or any of the other dealers, that are out there, or local coin dealer. And to be perfectly honest, I get most of mine at the flea market.
You can get great deals there if you're...
The best buy that I ever made on eBay as far as silver is I got a roll of 1987 Eagles. The premium on those right now is about $25 per coin.
Oh, wow.
Yeah.
87 was the least produced year, if I remember correctly.
Inventories. Are you seeing anything with the inventories? I'd asked you before we got on the call about what's going on over at SD Bullion and their Eagle inventory, and still waiting to hear back from Doc. Do you not have any idea as far as what's going on there?
Yeah, I don't know what the inventory is standing right now. I know that he had purchased about 3 or 4 monster boxes just before this whole shutdown from the Mint was announced. He's got a little bit, but probably not much. And frankly, by the end of the week, probably will be sold out. But he would know more than I.
Are you seeing anything as far as the shortages? And there's a great article over at Zero Hedge right now titled "Physical Gold Shortage Worst in Over a Decade: GOFO Most Negative Since 2001." And I was reading that just before I called you, and it's the GOFO on gold, which is the gold forward offered rate, which is what GOFO stands for, is at negative 0.185, and that is the most negative it has been since 2001. The GOFO rate, and you can correct me if I'm wrong, Eric, but that's kind of a barometer as far as physical metal out there and people willing to lease it or to loan against it. Is that right? I mean, as far as...
And it's based on the activity that's going on in the London Bullion Market Association's vaults. And I'm pulling up the article right now so I can take a look at it. Oh, it's a 1-month rate, actually. And that's pretty darn negative for a 1-month rate. Yeah, I mean, whenever it flips to negative, it means that the demand for the gold is exceeding the ability to get it leased. And so the physical is being tapped. And what you see in the last 2 years or so, we've seen more instances of GOFO going negative than at any time that it's been reported. I mean, the period that was cited in the Zero Hedge article probably only had negative rates for maybe about a week or so in 2001. And within the last 2 years, we've had periods of months where GOFO was negative every single day for months.
Yeah, which is not good.
It's not. It's an indication that the whole functioning of the market is just upside down, and that you can't run a futures commodity exchange without having at least some physical, because basically you're making a marriage between speculators and the producers and the users of any given commodity. And the problem with all of this financialization insanity that we've had in our system is that, amongst other things, our futures markets have gotten so lopsided with paper to the point where the connection between what producers deliver into an exchange that will be allocated for the consumers and the industrial users and whatnot has become so lopsided that the market doesn't really function the way it should. There's no price discovery. There's only price determination at the whim of the people who are flinging around the paper contracts. And
which is ridiculous.
The reason why we are now all of a sudden stopping and turning around and bouncing today is related to exactly that fact. The powers that be don't want to kill the price distorting mechanism system that they have up and running. And if they were to continue to do what they've been doing in the last week for another week, it could conceivably kill the COMEX. I mean, we're looking at December's delivery, which is the biggest delivery month, and there's a whole heck of a lot of people, particularly in silver, that are standing, and they keep rolling over their contracts. They're not surrendering this gigantic long position that's built up in the silver pit in COMEX. The open interest, which is an expression of the number of contracts open, the interest in contracts that remain open interest, is at almost an all-time high in the silver market, and that's precisely because of all of these people who basically understand that there's a rigged game going, and it doesn't, cost them that much to bet for a couple bucks downside versus the prospect of $20-30 upside in a calendar year period. I mean, the next 12 months, it's entirely possible to see silver move and retake its old all-time high. I mean, it's not, I'm not making that as a forecast per se, but there's certainly the kind of tinderbox of tight market conditions and interest amongst potential investors out there that once the momentum goes, you can start getting a short covering rally, and then poof, within 12 months, see huge moves. And the longs that are in the silver market seem to understand this. There's a lot of speculation as to exactly who the heck these longs are. I think it's mostly a combination of just smart, deep-pocketed investors.
Well, thanks for tuning in for part 1. And Eric Dubin and I will be back for part 2 within 24 hours. Thank you so much.